What if I told you that the most important investment financial decision you'll make is your investment philosophy? We'll cover a couple of points about what it is, what it's not, and then end with how you should allocate your time. So more importantly than which stock or asset allocation or tax strategy is your investment philosophy. Investment strategy is underneath investment philosophy, and investment tactics are underneath strategies. So start off with philosophy, then strategy, then tactics. An example of philosophies are overarching big picture stuff. Investment strategies are like asset allocation. Investment tactics are dollar cost averaging, rebalancing, and individual selections. So again, philosophies at the top, then strategy, then investments. Now, my personal investment philosophies, and I work with all my clients with the same concept. We want to be number one, broadly diversified, number two, global, three, low cost. Now, when I say broadly diversified, what we want to be is have our, we want to be diversified across tax category, across asset size, asset class, asset segment, broadly diversified. So we might want to have ETFs that don't collide with each other, so there's no overlap. So have U.S. versions, have emerging markets, international, real estate, and bonds. And so those 5 ETFs can more or less contain the entire investments for the world. We're investing in the best companies globally right there. So it's important to be global. You know why? Because used to be maybe 40, 50 years ago, 80% of the business in the world was here in the U.S. Now it's 50-50. 50% of the world GDP is outside of the U.S. Now you can invest in the Mag 7, the Russell 2000, the Russell 3000, but if you don't invest globally, you're going to miss out on a big chunk of the markets. For example, emerging markets and international in this last year had a bang up year. It was great, fantastic. So we want to be diversified. We want to be diversified also in tax category. So you want to have some of your assets in qualified, like 401ks, IRAs, some in taxable categories like your checking account or taxable brokerage account. But you also want to have some assets over here in the Roth after tax. Because when you retire, maybe in 20 years, 30 years, we don't really know what the tax rules are going to be. So that will provide us maximum flexibility into the future if you do a little pre-planning now with your philosophy. So low cost is the third component of my philosophy. So years ago, people would buy individual stocks and pay a large commission. Then it kind of merged into mutual funds. And it wasn't uncommon to have a 5% load and maybe a $30 or $40 charge to purchase the mutual fund. Those have come down over the years so that maybe you can get down to a 1% cost for a mutual fund. And then maybe in the last 15 years, costs have really started to plummet. And then ETFs really started to grow in the industry. And I'd say in the last 5 to 10 years, they're a dominant force. And the reason why, they trade for free, they're more tax efficient, and they buy and sell like stocks. So it's easier. When I sell a mutual fund, there's in between a $9 and $24 fee. And ETFs trade for free, so there's no cost there. So like if you buy ETFs from State Street or BlackRock or Dimensional, there's internal operating costs. So this is their marketing, accounting, research. And these costs have gotten down, so they're really, really low now. So my average portfolio that I mentioned, the 5 ETF, it's 18 basis points cost, which means it's 0.18%. So it's 0.0018. That's a very, very low cost, considering 20 years ago, we would face a 5% load, 1% annual fee. And that's the fee to the mutual fund provider. So anyway, broadly diversified, global, low cost, overarching philosophy. So when you design your investment philosophy, make sure you spend more time thinking about the philosophy than you do the strategy. Spend more time about the strategy than you do about the tactical part of it, right? So remember, philosophy is the big three, right? So it's broadly diversified, global, low cost, right? And then the strategy would be like your asset allocation, and then tactics would be DCA, dollar cost averaging, rebalancing, and the selection. So spend more time from the top down instead of the bottom up. Counterintuitively, your asset allocation is more important than individual selections, and more important than asset allocations is if you're broadly diversified, low cost, and global. So it matters a lot, your philosophy. And by the way, you need to make sure that you and your investment advisor kind of align on these philosophies. If not, there's going to be a high level gap, and it's hard to reconcile that. So start off with a matching philosophy, and then you'll have a much better relationship. And by the way, I'm available. If you have questions, if you'd like to talk, just give me a call. Go to the website, Hamilton Financial Planning, or click below, leave a comment, and we'll reply to all the comments. Anyway, thank you for taking the time to watch. Appreciate it. Thank you.